Hello, this is Japanese Economic Review Channel. Welcome to the Japan Macro Diagnostic for Q1 2026. Based on the Cabinet Office's first preliminary estimates, we will analyze the structural drivers of recent GDP growth. With real GDP up 0.5% and nominal GDP up 0.8%, this quarter highlights a definitive real nominal divergence. We will also review the final FY 2025 scorecard. Let's dive in and explore what these figures mean for your strategic planning. In Q1 2026, Japan's economy showed solid resilience. Real GDP advanced 0.5% quarter-over-quarter, translating to an annualized rate of 2.1%. However, nominal GDP ran significantly hotter at 0.8%, or 3.4% annualized. This indicates sustained inflationary friction across the broader economy. We are seeing a definitive recovery from the Q3 2025 contraction, driven by steady, albeit inflation-masked, aggregate demand. Unlike the volatile swings of 2025, Q1 growth was remarkably balanced. Domestic demand provided a steady 0.2 percentage point lift to real GDP, proving internal economic stability. Meanwhile, net exports slightly edged out domestic activity, acting as the primary marginal driver by adding 0.3 points. This dual-engine growth prevents over-reliance on a single sector and indicates a healthy expansion. The consistent premium of nominal over real growth is driven entirely by price dynamics. The overall GDP deflator held firm at plus 3.4% year-over-year. Meanwhile, the domestic demand deflator stayed anchored at plus 2.6%. This suggests that despite volatile import and export prices, underlying domestic inflation remains structurally embedded well above 2%. Businesses must adapt to this persistent inflationary environment. This matrix illustrates the real value gap across sectors. While volume growth was moderate, value growth inflated significantly. For example, public investments surged by 1.4% in real terms, but 2.4% nominally. Exports also jumped 1.7% in volume, but a massive 4.3% in value. Companies are successfully passing on costs, fueling nominal expansion and making pricing power a critical competitive advantage. Household spending recovered from a flat Q4, posting a real gain of 0.3%. Yet nominal spending rose by 0.6%. This 30 basis point inflation wedge confirms that consumers are increasing total outlays, but price inflation is eroding half of that purchasing power. Despite inflation, the fact that real consumption remains positive shows the fundamental resilience of Japanese households. Corporate investment, or CapEx, logged a positive 0.3% real expansion. This represents a normalization and cooling from the strong 1.4% surge we witnessed in Q4 2025. Simultaneously, changes in private inventories acted as a slight frictional force, dragging overall real GDP down by 0.1 percentage points. Overall, corporate spending remains structurally sound but cautiously optimistic. While regular government consumption remained practically flat at plus 0.1%, public fixed capital formation spiked. Reversing a 0.2% contraction in Q4, public investment surged by 1.4% in real terms and 2.4% nominally. This sharp rebound acted as a vital domestic scaffold, providing essential support to the economy during a quarter where corporate capex and housing growth were cooling. External demand generated a positive yield, with net exports adding 0.3 points to real GDP. Real exports expanded robustly by 1.7%, easily outpacing the 0.5% growth in real imports. Notably, export deflators ran exceptionally hot at plus 7.2% year-over-year. This drove a massive 4.3% surge in nominal export value, significantly boosting corporate top lines and acting as a major growth catalyst. Finally, our FY 2025 scorecard. Real GDP grew by 0.8%, while nominal GDP expanded by a historic 4.2%, accompanied by a 3.4% GDP deflator. For the full year, domestic demand anchored the economy, adding 1.0 percentage point and fully offsetting a 0.2 point external drag. Japan has fully entered a nominal-led growth phase, where strategic pricing will dictate future business success. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.